Hello, and welcome to the Blindfolded VAT Manager webcast from the Exchange Europe webcast series. I'm Cosima Chowdhury, and I will be facilitating today's session. Our presenter today is Peter Boroff. Let's get started. I will turn it over to today's presenter, Peter.
Yes, good afternoon and good morning. Welcome to this webcast as well from my end on the Blindfolded VAT Manager. In this webcast, I will explore the possible positions of a VAT manager in a company relative to the core finance processes and the risks and challenges a person in this role is likely to face. The information in this webcast is based on my own personal experiences as an in-house VAT specialist and discussions I've had with peers and customers on their own challenges. But first, let me introduce myself. I'm Peter Boroff, and I joined Vertex in November last year as the VAT Director in the Chief Tax Office. I'm based in Amsterdam, and in my role, I provide VAT guidance to colleagues and customers and provide thought leadership on global trends in VAT. Prior to joining Vertex, I was the Global Indirect Tax Lead responsible for VAT and customs within one of the large Dutch multinationals. In this role, I've been focusing for many years on tax data, tax processes, and automation. Amongst others, I initiated and managed, together with IT, the implementation of 2 tax add-ons, ran a VAT reporting outsourcing project, and participated in several business restructuring projects. Today in this webcast, I will discuss a wide variety of topics with you. But before doing this, I will first briefly introduce Vertex as a company. After this, we will dive into the pleasures of VAT as a simple tax, and then discuss the complications caused by internal-external changes. After this, I will discuss how you could manage the complexities, and finally, we will dive into some practical solutions. I will first provide you with a brief introduction to Vertex. The company originates from the US, where a little over 1,000 colleagues serve 4,500 customers, 60% of which are Fortune 500, with indirect tax automation solutions. But this is US, but to you, it's probably as interesting what we do in Europe. Globally, we have over 40 years of experience in supporting the end-to-end indirect tax process through determination, data management, and reporting solutions. In the US, this is focused on sales and use tax, but we now also bring true European support and solutions by a growing team of currently 40 to 45 colleagues, spread across Europe in offices in the UK, Ireland, Belgium, Netherlands, Germany, and Sweden. Many of our colleagues working in, for example, tax research, consulting, customer support, etc., have very deep VAT expertise from both in-house and consultancy roles, but also often have a very deep understanding on how VAT works in businesses and in ERP systems. We have over 250 VAT customers in Europe, and these businesses cover a range of industries and use a range of ERP platforms. But the one thing they have in common is complexity. As an example, Caterpillar. They're rolling out Vertex for VAT alongside an SAP rollout. Procter & Gamble is using Vertex in an offline mode, using it to analyze inconsistencies in their SAP tax coding, and they use the result to feed into a continual improvement process. With a spotlight on accounts payable, they went from only 65% correct coding to 95% plus within a couple of years of using Vertex. And finally, but not last, Amazon. They have a huge complexity of product range and global reach, sell everything to everywhere, to everyone. And anytime you see VAT on an Amazon screen, that is Vertex making the tax calculation alongside their platforms. And this is just a sample of the customers that we serve. Now I propose to focus more on VAT and focus on, let's say, the European perspective of what we do and the challenges. In essence and in design, VAT is a simple tax. and I assume everybody present in this webcast is familiar with the process of calculating VAT on sales and deducting VAT on purchases. However, VAT is becoming complicated when different rates and exemptions are introduced, and becomes complex when dealing with cross-border transactions in a multi-jurisdiction environment like the EU, let alone countries having to interpret, translate and implement EU directives in national legislation, where they can also still apply for derogations or decide to implement or not optional articles from the EU directive. This simplicity of the system at first sight is also one of the core pitfalls for any VAT manager, because in general, CFOs and finance directors do often not acknowledge the complexities and risks. However, in its simplicity, the amounts at stake within a business can become quite significant. In the past, I've made a few calculations and concluded that VAT throughput, which is output and input VAT together, can easily amount to 30% of the total revenue of a company. And also VAT on zero-rated supplies, which is one of the key risk areas within VAT in Europe, that can easily amount to be 10% of the same revenue. But even though the amounts at stake can be significant, building awareness is a continuous challenge, as CFOs, financial auditors, and often also heads of tax tend to think vertically in balance sheets and profit and loss statements, while VAT people tend to think horizontally in transactional flows. Most of you are already aware that VAT is basically everywhere in the business. Traditionally, VAT has always been managed through the reporting or record to report process. And usually, the operational VAT knowledge in a business is with the person or persons preparing and filing the VAT returns. But often, for these persons, preparing the VAT return is a marginal routine task, annexed to other, sometimes perceived even more important financial activities. And based on my experience, too often only about 5% of their time is spent on the VAT activity. So most of them do not have the time and resources, and sometimes also not the knowledge, to follow up on the quality checks and data improvements that a VAT manager would like them to do. And in the end, these persons do not manage the input going into a VAT return, as this is data resulting from sales and purchases. So actually, they can also not be held responsible for the quality of the data flowing into the VAT return. So a logical next step is to also engage with the persons involved in the sales process and making them more aware of VAT. Zero-rated supplies are, after all, a key risk area. So as a VAT manager, you want to get that right. It is crucial that your order-to-cash colleagues clearly understand when a transaction can be zero-rated and what the requirements are. Many of your order entry and customer service colleagues are also curious to understand the why. So often they are open for a training on this topic, as they also face the discussions with customers in case of errors. But in an average multinational, there are simply too many to train. And there are also many in sales that simply don't care that much, as their finance departments manage VAT. And their sole responsibility is to generate sales and revenue. So if a customer complains about an invoice containing VAT, it is often quite tempting for a sales manager or a customer service colleague to simply adjust the customer master data and change the customer tax classification to non-taxable in order to meet customers' expectations of a zero-rated invoice. And I've experienced this is one of the aspects where a tax engine or tax add-on comes in handy for a VAT manager, to embed automatic VAT controls in the order-to-cash process and thus eliminate non-compliant transactions. So assume AR is fixed. Let's move on to accounts payable. This is typically a topic where the VAT treatment of vendor invoices in your ERP system depends on AP clerks manually assigning tax codes. So this process is very prone to errors and definitely needs additional controls for VAT purposes. But who is going to execute the necessary, random and statistically relevant checks? The AP department, or third-party service provider in this field, is on tight production targets, and your finance department is facing limited resources and states it's actually the responsibility of the AP department to embed the necessary controls in their process. And finally, in your conversations, both your order to cash and your purchase to pay colleagues are complaining about bad master data and potentially have stopped chasing the required improvements, as either they do not know where to go within the company or responsiveness is low and changes are not implemented. Or the errors are happening over and over again. And here also the dilemma of the VAT manager starts. If you're looking at the end-to-end VAT process, from master data to reporting, the responsibility is scattered around multiple departments, and the VAT manager is not part of any of those departments, and also not included in the responsibility matrices for these partners. So why should you care if you're not responsible? And this is where I believe accountability comes in. Who within your organization is the person, the CFO or finance director, who turn his or her eye on in case of a multi-million euro VAT hit? It is very likely that this will be the VAT manager. In the end, he or she is supposed to own the end-to-end VAT process without having responsibility over any of its sub-processes. And here the blindfolding also starts, because how do you know VAT is sufficiently prioritized in each of the departments involved, and VAT relevant data is correctly captured and processed in your organization across the globe? And there is a lot that can go wrong in each VAT reporting entity. Every VAT manager and VAT accountant is able to draft a list of top-of-mind VAT issues that should be addressed. But while being centrally accountable for VAT across the globe, how do you know a new customer in, for example, Indonesia is classified correctly for VAT? And how do you know the invoice from a customs agent in Poland containing import VAT and a service fee directed to your Dutch principal was correctly processed by AP in India? And how do you know a drop shipment is processed both for AP and AR under the same VAT number? And how do you know foreign VAT registrations are recorded correctly under the correct SAP partner function? And finally, how do you ensure that errors discovered in the VAT reporting process get a proper follow-up back into the end-to-end VAT process? Most of all taxes, I believe VAT has become a data and process-driven tax. Difficult to properly embed, as it's scattered across people, processes and systems, and differs per organization or entity. And to make it worse, we are working in a very volatile world where change is the norm. So as change is the norm nowadays, let's discuss this in a little bit more detail. I would say that level one of the changes that we have to deal with are internal changes within your organization. All of these changes impact either people, processes, systems, or how you are organized. And as a result, these changes are often also influencing the end-to-end VAT process. And each change potentially requires a reconfiguration of your VAT setup or governance. Let's just discuss a few practical examples. The first example is in supply chain remodeling. I once, by coincidence, learned that the supply chain manager for one of our Spanish businesses decided to stop renting a warehouse in Spain, but instead decided renting a warehouse in France and ship from there. The VAT implications of this change were not considered nor implemented, so a VAT registration was missing, and they were unaware of the implications of VAT invoicing to French and Spanish customers. The second example relates to outsourcing/offshoring. A few years ago, a project was initiated to outsource accounts payable to India and VAT return preparation to the same organization in Poland. VAT was not considered in the agreements, KPIs and processes. Also, transfer of VAT reporting activities was done remote, so no proper transfer and shadowing of activities was arranged for. And finally, an automation example. In a SAP FIM project, which for you who don't know is a vendor invoice management system, implementation of touchless accounts payable was almost implemented, which implied tax codes would be assigned automatically. But there was no tax engine involved, and the fact that VAT is not part of the three-way match was ignored. So there was no way the system could handle the various possibilities of, for example, zero-rated or no VAT on an invoice. In order to stay on top of all of these changes, it's crucial to have close working relationships with, amongst others, IT, your supply chain department, your legal department, finance department, accounts payable and accounts receivable, and of course your direct tax colleagues. But even if you've established that, the work does not stop. We cannot not only look inside the company, but also have to consider our volatile external environment. So there is a second layer of change, being all of the legal changes occurring frequently. Some of these changes are small and thus easily overlooked, and some are fundamental. But in order to stay compliant, you need to ensure you have a proper knowledge management process. You also need to make sure you can implement and test. And you also need to have the required time and resources. Regarding the knowledge management process, the question is, how do you stay on top of all of the legal requirements across the globe? Do you rely on newsletters and informal, for free sources, or do you have a big four supplying a tailor-made frequent update to your company? Or are updates still managed by local finance colleagues and amongst others communicated to your IT departments? One of the hurdles for doing this centrally is that many changes and relevant details are only communicated in local language. Irrespective of how you maintain your knowledge, most changes need to be implemented in ERP systems and other platforms, and thus need to be translated to IT. And as IT and tax speak different languages, it is crucial to ensure nothing is lost in translation, and that in larger deployments also the VAT output is properly tested by qualified persons. And finally, as a VAT manager, you also need to ensure you have sufficient time to stay up to date. Ensure that you really understand the details of the legislative changes, and as important, its implications for your business. In addition, you also need to have the time and understanding to translate this in business requirements and communicate with IT. And timing can also be an issue, as for example, a country like Italy has already proven it will not hesitate to implement changes over the weekend. This is a tremendous challenge to ensure your fundament as designed keeps working properly, while managing and embedding all internal and external changes, and to safeguard that the implemented changes do not affect your fundament. And in Europe currently, there are some significant changes coming our way. And if you're lucky, your company is affected by all. Following up on CTC developments, Brexit and VAT on e-commerce is already a time-consuming job. And the current COVID-19 crisis potentially triggers even more changes and may speed up developments like CTC. In the gradual move to CTC, nowadays paper is still the leading carrier for invoices, but this is expected to change quickly. The adoption of the EU Invoice Directive back in 2013 has created an EU-wide legal standard that allows e-invoicing and facilitates a widespread and rapid acceptance. So it took us about 30 years to move from locally allowed EDI invoicing to widely accepted e-invoicing. And now tax authorities are quickly, within a few years, monopolizing data-driven invoicing by implementing mandatory invoice clearance models. This also implies a change from retrospective tax audits to auditing in real time within the financial processes of a business, and this requires that a business process, VAT, is first time right. In these models, there is a full transparency, and instead of a VAT auditor having to prove errors in your VAT return, with pre-filled VAT returns, you will have to be able to prove the tax authority made an error while using your company's data. And of course, this is a challenge. And I believe with reporting of financial data in 2024 and logistics data a year later in 2025, the basis for a VAT blockchain is laid, and it's realistic that VAT blockchain will be there before 2035. But what is the likelihood of continuous transaction control spreading across Europe? CTC in this approach is e-invoicing or e-invoice clearance via tax authority approval or a platform and real-time or near real-time reporting. I believe pre-filled VAT returns are an automatic consequence of this data flow. The current rollout of CTC is quite gradual, and mostly countries with a large VAT gap deploy these models. However, the VAT gap is not the only trigger here, as there also seems to be a correlation with state deficits. For example, a country like Lithuania, who has not deployed CTC, has a VAT gap larger than Poland's and almost as large as Italy's VAT gap, but no state deficit. This is all reflected in the left map on your screen, where the yellow countries have already implemented or published CTC and the green countries have not. Blue reflect the countries that, based on the combination of their VAT gap and state deficit, would be likely to introduce CTC. So based on this, Romania and Slovakia are likely countries to also implement a CTC model. However, the map on the right reflects the possible situation based on the same calculation methods if you take the COVID-19 impact on state deficits into account and keep the VAT gap as is. Then, all of a sudden, almost half of the EU is likely to deploy a CTC model. And of course, as this is surrounded by uncertainty, probably the truth is somewhere in the middle and will depend on each country's capabilities to recover. And this will heavily depend on whether the recovery will be V-shape or a U-shape with a very wide bottom. But it's good to understand that deployment of a CTC model as such can go relatively quick. This is just an example based on Italy, and I will not discuss the legal process for obtaining a derogation from an EU directive. This is just to reflect that in the example of Italy, it took them a little over half a year to arrange for a derogation. So it's also, for other countries, relatively quick to implement CTC. So in this model, with your base layer of people, processes and systems, and your two layers of change, how can you manage VAT? I must admit there's no holy grail here, as businesses differ too much. So I can only highlight a few things based on my experiences. First, you need speed and agility within your organization. Some countries give ample notice, like Australia, Canada, normally the US, and most of the countries in Europe, about changes. Some countries, however, are known to give late notice. Brazil, India, Italy, and Latin America are famous for giving late notice. This makes it difficult to align with IT planning and release schedules. Countries release compliance requirements in local language only, or English summary versions much later. And if IT departments are centralized, then the work is done in English. how to get the government requirements in English and translate it to your IT departments. Some countries make it difficult to test submissions if there is no person located in the country, as they require a domestic social security number to get access to their platforms. This makes it very difficult to make test runs directly to the platform. And then during testing, but also during go live, some error messages are only in local language, and government help desks cannot respond in English. So there is a serious language challenge. So by now it should be clear that as a VAT manager, you can no longer operate as an internal VAT advisor, but to bring true value to the company, you should be fully integrated also with finance, which is often your sponsor, and IT, which is an important source of support. Without a solid collaboration with these two, it will be extremely difficult to drive and implement the required changes. Also, finance and IT need your guidance towards a joint compliance destination. As tax departments traditionally already work together with finance, I will discuss in some more detail the collaboration with IT and why this is mutually beneficial. It's important to understand that you need IT, but IT also needs the VAT manager. And it's really valuable to collaborate, seek alliances, and joint agendas. Tax requirements can seriously hamper IT projects. And by making the selection of solutions a joint operation, as a VAT manager, you can have your projects embedded in the larger IT business case. For example, if IT schedules an ERP rollout or upgrade, this is a great opportunity for you to embed some automated controls and maybe even implement a tax engine. In the overall budget, the costs for such an engine are limited. So if you are early in the process, you may have this included. But for this, you need to convince IT that it will, first, be less expensive, as they will be released from customizing and maintaining the VAT settings in ERP. And secondly, it will improve the company's overall compliance position. The second example is that if you plan to outsource the VAT compliance process, you definitely need to engage with IT to either provide access to the systems, run security checks, or arrange an alternative setup to have the data transferred to the third party. But at the same time, there may also be an interest from IT, and the third party will probably run tests on the data and report on this. IT can use this to improve the system setup and the master data quality. So there are quite some links between tax IT related projects and pure IT projects, and it's good to know the mutual agenda. So a close working relation with IT can be very beneficial. I've always worked very close with IT, so I've also learned what IT needs from a VAT manager and the wider tax team. The following few slides I borrowed from one of my former IT managers, and they reflect his needs from a VAT manager and the wider tax department. I will discuss only a few key takeaways. IT in general wants to implement changes on a weekend when systems can be brought down with minimal disruption to the business. Unfortunately, this often does not match with the date deadlines issued by governments while publishing changes. Communication is also key. Who monitors the legal requirements globally, and how are these communicated? But as important, which legal entities and systems are affected by the change? It is crucial as a VAT manager to have a clear understanding of who does what. As a VAT manager, do you read and analyze the technical requirements of, for example, SII reporting in Spain? Or do you expect your IT manager does this? Are you able to formulate the business requirements in such a way that IT understands, and this is properly embedded and tested in the live system? And do you sign off on the test results? The risk of misunderstanding in communication should not be underestimated. So if you formulate requirements, it is essential you also receive and understand feedback of what IT does with your requirements and review the test results. On what you now see on the screen, you basically first see a discussion between a VAT manager and an SAP functional consultant about the doc, the requirements. And basically, there is already in this discussion quite a mismatch on the doc that the VAT manager wants to buy and the doc that is perceived to be wanted. But the functional SAP consultant goes with his perception to development, and they translate your requirements to the SAP development team. And as a result, there is a serious risk that there is quite a mismatch to the initial requirements that you think as a VAT manager you have formulated and what's ultimately been implemented into the system. So this is why it's important to be, let's say, included in the end-to-end process of this implementation. Also for your IT colleagues, it's essential that they have access to qualified and responsive subject matter experts. This, for example, does not always have to be a VAT manager. It can also very well be an accountant in FinOps involved in tax operations. For example, the persons currently doing your VAT return preparation. And maybe you even have the luxury of a separate role of a tax technologist or taxologist. And for the VAT manager, it's important to have detailed insights in what builds your business case. This includes VAT throughput, audit issues, penalties, error rates, and horror stories of what has gone wrong but was detected by coincidence. So you really need to have a good grasp of what's going on globally. It's also important that you get a seat at the table at an early stage and not be invited to the party late. To get a seat on the table, it's crucial that you build rapport with your IT department and invest in the relationship. Take the time to train them on how VAT works, challenge them and respect their tight timelines, but also show an interest in the possibilities and impossibilities of the systems. I once worked with an SAP expert who indicated we did not need VAT automation in our SAP system, as they had customized the system over the years and everything worked fine. I then challenged him to check this based on a few more complicated EU transactions, and he gracefully took up the challenge. And I was lucky because after his assessment, he was my best ally in promoting VAT automation because he had seen in his system that not everything for VAT was properly configured. VAT has become a data challenge, and in this respect, you can also learn from your IT colleagues. Like you, they also think in processes and have a long-lasting history with data challenges. It's also important to monitor trends closely, inform IT on what's coming, have frequent discussions on it. And here there is a squeeze between, on the one hand, the sometimes lengthy selection and approval cycles with IT, and on the other hand, legal technical requirements being published late by the authorities. It's also good to drive and implement global standards where possible. In my previous job, we deployed a global tax code standard managed by me, and new tax codes could only be created by me. And after this, they could be released into ERP systems. This has facilitated communication with IT tremendously and also provided them with a clear reference instead of different codes per country where you always have to explain, well, okay, this is what a specific tax code is doing. Now let's discuss some models for VAT management. These are high level, and as businesses differ to a great extent, I believe there is no holy grail, but maybe there are some elements you can pick out of it. Let's start with the in-house decentralized model. This is the traditional model many multinationals used or still use. VAT compliance, but also monitoring the local legal developments, is done locally by a local tax accountant. And for some of the larger countries, one or more tax specialists are employed. Third-party support is also arranged locally through either Big Four or a local boutique. And IT systems are often updated based on local requests. What I have seen is that in this model, ERP and local processes sometimes are over-designed, as local colleagues believe these are local requirements. I have, for example, seen this with some Eastern European colleagues who were completely risk-averse, as this being part of their culture. On the other hand, I've also seen ERP not being able to handle local requirements and people making all kinds of manual corrections. This can happen, for example, if IT is more centralized and communication between local finance and central IT is not good. Then at a certain point, your local colleagues will stop raising tickets to IT and you will have systemic issues in your systems. I believe that pros of the in-house decentralized model is that your VAT process is very close to the business and very close to local audits. Another advantage is also that it's close to local authorities and to legal developments. And finally, local language virtually never is an issue. However, in such a model, it's difficult to maintain standard operating procedures or to implement them, and to ensure that as a central VAT manager, you also get central controls of what's going on. Continuity and priority is also a risk, as VAT is often done by only one person who also has general accounting responsibilities. So it's easy that VAT gets less attention, and if such a person gets ill or moves to another job, it's easy to lose VAT activities in the transition. Also in the decentralized model, as VAT is only part of somebody's activities, there may be a lack of knowledge and specialization, due to which issues can be systemic and ERP solutions vary country specific. The next level is a centralized in-house model. This model is often implemented from a cost and efficiency perspective. Here, supportive functions like IT and FinOps are centralized, in sometimes offshore locations with low labor costs. If your company decides to move to such a centralized model, it's crucial that tax and VAT are fully involved in the project, as on a daily basis, decisions are taken in these projects on which functions can be moved out of a country and which should be retained. And as for tax, you heavily rely on these local colleagues, and possibilities to centralize differ per country. You should be close to the ball. Implementing this model implies a complete shift in processes, so you will need to redesign your VAT processes and ratios. What is done in the regional hub, and what still needs to be done locally, and what are the skill sets and profiles needed for these activities? Some considerations. Can your regional hub recruit qualified employees with the right language skills? Can you access tax authority IT platforms without local presence? Can you have a few dedicated tax accountants or managers in the center? Or are VAT activities still spread across FinOps in the center? Can you at all allocate the local tax activities to the center, or should these be retained locally? And if dedicated tax resources are recruited in either the center or the country, how do you manage these? And finally, who is responsible for signaling needed changes in ERP? The advantages of this model is that it's easier to implement and maintain centralized control and standard operating procedures. And if you have the luxury of having dedicated VAT accountants, it's also easier to manage the knowledge in the team. And then VAT management is no longer a side activity and issue management is easier. However, also here there are some disadvantages as well. There is a disconnect from daily business and local audits, purely because of the difference and sometimes also because of time differences. Language can be an issue and sometimes even a blocker. And there are investments needed in compliance and workflow software and investments to get legislative updates. The third model is a model where outsourcing is the case. In this model, the VAT relevant outsourcing relates to VAT reporting, accounts processing, and IT support. AP clerks are often at a production target, and correct VAT processing is often not part of their targets. As a result, I've experienced that the more complex invoices, containing, for example, multiple rates, are processed in a simple way. A no VAT tax code is used, and as a result, the VAT on the invoice becomes part of your costs, instead of being deducted. You can create all the decision trees in the world. These are not used. Include second line escalation. They do not have the time for this. And provide training that's often hampered by high staff turnover. Without correct VAT processing being part of the KPIs, I believe productivity will always prevail over accuracy for VAT. In the previous models, you have invested a lot in building a relationship with your IT colleagues. But will the colleagues that you trained be made redundant, and will their activities move to an outsourcer? And how agile will the new IT organization be to react on VAT changes? The pros and cons in this model for a VAT manager mainly relate to VAT compliance outsourcing. One of the advantages, I believe, is that the risk for continuity and the requirement to make significant IT investments is moved to your outsourcing partner. Local knowledge, language, and audit support is likely to be embedded in the service model. And it's relatively easy to centralize controls and to implement standard operating procedures. And here you can also lean then on the experience and knowledge of your third party. However, there are also a few cons. You cannot outsource everything in the end-to-end VAT process. So you really need to have clear cutoff lines about who does what and who bears the responsibility over certain steps. The total cost of VAT compliance becomes transparent. And this is also a hurdle, because then all of a sudden this is a solution that's perceived to be expensive, which not by definition needs to be the case, because third parties do this at a large scale, so they have the efficiencies and the automation implemented that you do not have. Distances from daily business require solid communication and also a solid escalation structure in order to ensure issues are followed up rapidly. And finally, automation. The key advantage for me of automating VAT processes is that processes and controls are to a great extent embedded in systems, and there is little to no room for manual errors. But unfortunately, at this stage, not everything can be automated. Although, in a gradual move to blockchain, I believe the current manual parts of the process will also gradually disappear and be automated. But it's unclear and difficult to predict what the timelines are for this. VAT calculations in the order to cash process can be automated completely by implementing a tax engine. However, accounts payable automation is still a challenge, as the VAT relevant data sits in multi-format invoices and paper invoicing is still the norm. But this multi-format paper invoicing could quickly disappear with efficient data-driven invoicing models like e-invoicing and mandatory invoice clearance. And for reporting, there is also a clear trend that tax authorities develop a preference to receive the raw data from the transactions, see Making Tax Digital in the UK, rather than this data being manually consolidated and adjusted in a returns form. So managing the data is the core challenge, but also here there are developments. There are, for example, experiments to use machine learning and artificial intelligence to classify products to tax categories. But the challenge, of course, is that classifications and tax decisions are sometimes arbitrary. On the other hand, customer and vendor master data, in essence, is very well structured, but there is no distribution network yet to exchange and update this data. Some final thoughts on the previous slides and to trigger discussions and lines of thinking. As a VAT manager, the question is, what do you really see? Do you have the network, resources and skills in place to see what is happening within your organization across the globe? To what extent is what you see built on trust? And to what extent is this built on a true analysis and understanding of people, processes, systems, and your organization? And then, as a VAT manager, what do you want to see? Where do you believe or feel your responsibility should begin and end? Do you really want to do data analysis and extensive random checks? Or do you rather stay the internal advisor? Where does your role start? And where do IT and finance start? And where does your role end? And what does your organization allow you to see? Do you have easy access to ERP data? Is your organization prepared to invest in tooling and third-party support to facilitate your seeing? And what does your CFO expect you to see? Will you be held accountable if your organization faces an unexpected VAT hit impacting the quarterly figures? If yes, is this properly reflected in your job description, job level, responsibility matrices, and your mandate? Is there a clear exit package in your labor contract? And finally, what do the tax authorities expect you to see? Do you know this at all? Is promptly reacting on questions raised still enough, or do they expect you to be proactive? Do you know what they can see? Do they have more tax relevant data than you? Do you know what they do with this data? So the question is, do you see or are you blindfolded? So now it's time for Q&A. So if you have any questions, please put them in the Q&A section. And I'm also open for comments and, let's say, different thoughts than mine, because a lot of this is also reflections of opinions. So if there are no questions, I propose we close this webinar, and I'll hand over to you again, Kusuma.
Thank you, Peter. This concludes today's webcast presentation. Any questions we did not answer, if you want to add any now, they will be collected and will be followed up via email. On behalf of our presenter and Vertex, I want to thank you for your participation today. Thank you and enjoy the rest of your day.